There we go.
My seat.
So this is, yeah. Good morning, I'm Trinity Chavez. It is Wednesday, January 17th, and you are watching NYSE TV Live. We're only about 2 weeks into the new year, but we've already seen a landmark decision that is shaking up the industry and will impact the markets for years to come. Last week, the SEC officially approving the listing and trading of spot Bitcoin ETFs, which will give investors from Wall Street to Main Street more ways to gain access to the most valuable cryptocurrency. Here's how. A spot Bitcoin ETF allows investors to gain exposure to Bitcoin without effort and risks that come along with owning Bitcoin directly. It differs from Bitcoin futures ETFs, which were approved by the SEC back in 2021. Spot Bitcoin ETFs have direct ownership of Bitcoins and tracks the real-time price of security, while a Bitcoin futures ETF involves buying or selling Bitcoin at a pre-agreed price later on. Now, this decision to approve spot Bitcoin ETFs also means that we could see the cryptocurrency appear in mainstream portfolios, including employer-sponsored 401k plans. Now, the SEC gave the green light to 11 spot Bitcoin ETFs last week, 3 of which are trading as a part of the New York Stock Exchange. NYSE ARCA is listing and trading shares of Grayscale Bitcoin Trust, ticker symbol GBTC, Bitwise Bitcoin ETF, ticker symbol BITB, and the Hashdex Bitcoin ETF, ticker symbol DeFi. Now, this victory did not come easy for the crypto community. The industry had been seeking regulatory approval from the SEC for over a decade. From March 2018 through March 2023, the agency rejected more than 20 applications for a spot Bitcoin ETF over fears of market manipulation. Now, in 2021, Gessler slammed the cryptocurrency industry as the, quote, Wild West, a phrase he's repeated on multiple occasions, while adding the industry was, quote, rife with fraud, scams, and abuse in certain applications. But the tide changed in 2023. This past August, the D.C. Circuit Court of Appeals ruled that the SEC was wrong to reject Grayscale's proposal to list a spot Bitcoin ETF. Now, Gessler made reference to this verdict in explaining the SEC's decision to approve spot Bitcoin exchange-traded products, saying, quote, based on these circumstances and those discussed more fully in the approval order, I feel the most sustainable path forward is to approve the listing and trading of these spot Bitcoin ETP shares. Now, if you think Gessler sounded reluctant, you'd be right. The SEC chairman ending his January 10th statement with this, quote, while we approved the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. So 1 week after all of this goes down, how much has it altered the price of Bitcoin? Well, not significantly, though we have seen the price slide a little bit from over $46,000 to about $43,000 a token. Now, as we mentioned earlier, 3 spot Bitcoin ETFs are trading on the NYSE ARCA Grayscale Bitcoin Trust, Bitwise Bitcoin ETF, and Hashdex Bitcoin ETF. Doug Jonas, the head of Exchange Traded Products, is here at the New York Stock Exchange, and he's joining us now on NYSE TV Live to talk more about this. Now, Doug, good morning. It's a great morning to join us on the show.
It's always great to be here. I love the show. Long time watcher, maybe only second time appearance, but thank you for having me. It's an exciting day. It's an exciting week that continues really right out of the gate at the New York Stock Exchange from the first of the year.
Yeah, and I actually want to talk more about on the exchanges side, right? Tell us exactly about all of this that we just talked about. What's happening right now?
Yeah, it's an interesting time, and you brought it up in the earlier part, right? As an industry, we have been working on this for over a decade. Mm-hmm. And when I say working on this, there's a series, anytime there's a new innovation in the ETF industry, anytime we're working on something that hasn't been done before, we need to go through a series of regulatory filings and regulatory approvals.
Yeah.
And in this case, but it's not alone, it took us a really long time to get the SEC comfortable, to get all the different parties comfortable, to the point where they were approving the multiple filings that are required. And it all sort of culminated, I would say maybe about 3-4 months ago. As you mentioned, that court case really started to move things along. At that point, we became re-engaged with the SEC, and we worked through a series of steps where ultimately they approved the rule filings last week, which allowed for immediate effectiveness of these ETFs. We're now trading all Bitcoin-related ETFs here at the New York Stock Exchange. We started with the very first futures-based ETF ETFs on Bitcoin. Those have been out now for over 2 years and work really well, by the way. And then we've now added spot Bitcoin to, the quiver, if you will. And so investors, depending on which one they want to choose from, they're all available for trading here at the New York Stock Exchange.
So let's talk about more of the significance of this, right? I mean, this is hugely significant, right, for the Bitcoin community, but specifically the NYSE. Why is this so significant?
Yeah, I think it's a good point, right? So the Bitcoin community itself, maybe I would almost argue, or at least think about, the fact that for them, they've always had access to Bitcoin. They've been very comfortable with the idea of wallets and off-exchange trading and very large bid-ask spreads. If you sort of look at the marketplaces, we wouldn't define them as exchanges. They're not regulated exchanges. But marketplaces have been trading Bitcoin for a very long time. If you're in the crypto community and you're comfortable with that and you understand the difference between wallets and frozen versus not frozen, but the reality is over the last few years, a lot of these firms, we've seen these marketplaces dry up, we've seen them close down, we've seen investors have difficulty accessing those wallets. There is a certain level of comfort, I think, for some investors who want to be in that space to be able to own Bitcoin through an ETF. Something that's on exchange, it's regulated, it's available through my brokerage account, your brokerage account. It's a little easier. And so ETFs are doing today or this week what they've always done, which is they're providing access. The underlying investments, regardless of Bitcoin or any other security, those are personal decisions to be made with an investment advisor. Our role is to make sure there's liquidity. And if somebody does choose to invest in an ETF, they do choose to invest, whether it's a Bitcoin ETF or any other ETF. We're trading over 3,000 ETFs here at the New York Stock Exchange. Why is it a big deal for us? We want to make sure the liquidity partners are there. So we have, dozens of liquidity providers. We're working with them to make sure bid-ask spreads are very tight. When the opening auction, we're not open yet this morning, when that happens, there's lots of liquidity from any demand that built up overnight. And so we're making sure our part of the E and ETF, the exchange, is running so smoothly that people just don't think about it.
And I want to talk more about the whole trading process. We are about a week into trading spot Bitcoin ETFs. How much activity is the exchange currently seeing?
Yeah, we're seeing quite a bit. I mean, it's probably pent-up demand, as we said, that needs to work itself out. We're seeing brand new products. We're also seeing brand new advertising campaigns. We're sort of sitting in the epicenter here. We see the latest news. It can take a while for the reporters to write stories, for it to get all the way across newspapers and how everybody receives their news. So it will take a while. We also are aware that platforms, sometimes broker-dealers, when you log into your account, not every security is there right away. It can take time for compliance approvals, et cetera. So some of that is still moving through, but I would say we're in at least top 10 or top 20 asset classes in terms of total trading within the first week of going live.
And I want to talk more about NYSE ARCA, right? So 3 spot Bitcoin ETFs are trading there. I mean, for our viewers who might not know, explain what NYSE ARCA is.
Yeah, it's interesting. We sort of live and breathe this, and we don't tend to think about it. The reality is, the New York Stock Exchange, we run a number of different exchanges here. Obviously, we have the floor behind us, right? That's the premier listing venue for companies around the world. And ETFs, we actually started listing ETFs on the floor. In fact, 9 transferred down to the floor last week. So it's an exciting place. However, that's sort of the premier venue. We combine both electronic trading with human trading. We also run the world's largest ETF exchange. It's called NYSE ARCA. Now, NYSE ARCA we've had since really the beginning of ETFs, and that's where the majority of ETFs list and trade in the US. And so we get into the distinctions. I think at the end of the day, for an investor who's investing, they're probably not focusing heavily on where is it traded. They want to know, is the liquidity there? Do bid-ask spreads look really good? Am I going to be able to trade in, trade out without any concerns? And so we're focused on all those pieces.
And I want to talk more about, obviously we kicked off 2024. What sort of trends are you seeing right now impact this space?
Yeah, ETFs have been pretty interesting. So the first trend clearly is active management. So a stock picker, someone behind the scenes picking and choosing what's in the investment versus just following an index like we're used to, like the ICE 500 or the S&P 500, right? Those are sort of what we would call benchmark indexes, newspaper index, the Dow Jones Industrial Average. They've been around for a very long time. Active management has been around just as long. Somebody actually picking securities. If you look across the ETF landscape. It's the fastest growing area in terms of number of listings. It's also had tremendous cash flow over the last 3 years, and over 70% of all actively managed ETFs last year had cash inflow.
Okay.
So the first trend clearly is people, individuals, advisors, institutions, they're looking for the best stock pickers and bond pickers to run their ETFs. And so that would be number one. The second is mutual fund to ETF conversion. We're all used to mutual funds. We've had mutual funds for many years. We're starting to see for the last 2 years, about $70 billion has converted directly from mutual funds straight into ETFs.
Wow.
Why? Because people like ETFs a little bit more. They're easily traded. They're easily accessible. They tend to be lower cost. And so that's been a big deal. And the third, especially around ETFs, they're growing so quickly, people want to be educated. So a lot of the people don't realize, but we spun off a website for education. It's etfcentral.com.
Oh.
It's free. You can find everything about ETFs. You can learn. You can actually become a certified ETF advisor on ETF Central.
Wow.
And you can type into the screener anything you're looking for. So someone's watching and they want to learn about Bitcoin, they can just type Bitcoin in the screener. They want to learn about AI. If you're following Davos, a lot of conversation on AI. Type in AI, you'll get every AI ETF, a lot of information there. So it's all available, provided by the New York Stock Exchange, etfcentral.com.
Yes, awesome. Well, thank you so much for joining me, Doug.
Thanks for having me this morning.
No, absolutely. Now, in other news, Grayscale Bitcoin Trust saw millions of shares trading volume with just the first 10 minutes of its first day of trading on January 11th. And our own Judy Shaw spoke to Grayscale CEO Michael Sonnenschein about that big moment. Let's take a listen.
You know, I think, all the way back to 2016 when we first even came to NYSE to bring GBTC as an ETF to market. And for us, this is really the culmination of 10 years of hard work. We couldn't have done it without all of our investors, their support, their patience. And I also could not have done this without the amazing team that I have at Grayscale. Everybody has weathered all different kinds of cycles in crypto. And now here we are today. We did it. We are the first spot Bitcoin ETF to trade here in the US and on NYSE.
Exactly. So you began trading today. So tell me, how are you feeling on this first day of trading? What are you looking for?
Well, really, we're looking at how the market has been reacting to GBTC's uplisting. The trading volume has been tremendous. I think even just 90 minutes into trading this morning, we had already traded over $1 billion notionally. So really, really strong showing coming right out the gate.
All right, and how about your fees? Talk to me about your fee structure. Why?
Well, so for a long time, as we were going through the uplisting process, we unfortunately had to sue the SEC, have a court victory in our hand to be able to push GBTC forward and kind of clear the pathway for other spot Bitcoin ETFs to come to market, not just for GBTC. And along the way, we promised investors that upon uplisting, we would lower fees. So I'm proud to say that we, fulfilled that commitment. We did lower our fees by 25%. When you look across the landscape now, there's going to be 11 spot Bitcoin ETFs trading here in the US, and different features of them will resonate with different types of investors. I would say for Grayscale, it will continue to be a best-in-class product. It comes to NYSE now with $28 billion of AUM, hundreds of millions of dollars in notional trading volume, a very diversified investor base, and penny-wide spreads. These are the things that I think really matter to investors, and some of the other products coming to market, that's great. We welcome the competition. We want investors to have choice, but all of those products are just getting started, and they're also not being offered by a crypto specialist like Grayscale.
All right, so you mentioned the competition. How are you feeling about competing with others that are in this space?
Well, I think in many instances, Grayscale has been compared to some of the largest asset managers in the world. That is a humbling experience. A lot of people don't realize Grayscale is only about 75 employees strong. And this is an area and a specialty that we've really developed over this last decade. And to finally see some of the largest asset managers in the world get involved in the space with their own products, I think for us is not only a signal that we've known was true, that Bitcoin and crypto was here to stay, but we've actually now seen crypto and Bitcoin with these ETFs actually weave itself into the existing financial system. So we couldn't be prouder to have led this charge, and it's great to see so many other asset managers coming to the space as well.
All right, and finally, what does this mean for the crypto space in 2024?
Well, there's a couple of things that I think investors should be looking out for. When you look out to perhaps middle of 2024, you're going to have the Bitcoin halving event. That's historically been a big catalyst for crypto, something to watch. And also 2024 is the US presidential election year. And I do know that a lot of investors are thinking about technology when it comes to choosing their political candidates. So we hope to see more and more of those candidates informed about Bitcoin, about crypto more broadly, AI, et cetera. So a lot of good catalysts in 2024.
Thanks again to Judy Shaw for that and Grayscale CEO Michael Sonnenschein. Now, the crypto community has seen plenty of highs and lows in just the past few years. At the start of 2020, the price of Bitcoin was trading below $7,000 a token, and by December of that year, the price shot up to $29,000, an increase of more than 400%. Then in 2021, the price of Bitcoin really took off. The cryptocurrency traded above $60,000 for the first time in spring of that year, and then hit an all-time high of nearly $69,000 a token in November 2021. But the good times didn't last. The price of Bitcoin plummeted, dipping below $20,000 less than a year later. However, the price of Bitcoin has seen resurgence in just the past few months as speculation over spot Bitcoin ETF heated up. The most valuable cryptocurrency is currently trading at $43,000 a token. Joining me now to talk more about this is FinTech TV founder and CEO Vince Molinari. Good morning, Vince.
Good morning, Trinity. Thanks so much for having me back.
It's always great to have you on. I mean, how can we not have you back on? It's a crypto show. We got
We're here.
So I want to talk to you. Prior to last week, investors could trade Bitcoin future ETFs. Now, why is trading Bitcoin ETFs so significant right now?
Well, look, I think it's a catalytic moment, right? It's one of those milestones after the long-awaited approval from the SEC. Many years later, 11 spot ETFs approved. Really what it does is open the democratization to the retail investor to have exposure to Bitcoin in a proper product that is traded on an exchange, a true exchange. And we have this confusion at time when other venues call themselves exchanges, but they're not regulated. So a lot of investor protection and comfort, and therefore allowing greater flows of capital to come into the new product.
And I was talking about how we saw the price drastically slide from $46,000 to about $43,000. Why do you feel that the price drastically slid? Why do you think we saw such a sharp decline?
I think there's a couple of factors, and I think we'll go back to speculation, right? The market's being pretty efficient and pricing in advance, a little bit of buy the rumor, sell the news. But I think there's a phenomenon when you go back and look at some of the concentrated position of the historic Bitcoin whales that have been holding billions and billions and billions of dollars of Bitcoin and haven't had the liquidity event to lighten the load a little bit. So I think we saw about estimates were 5 to 7 billion of liquidations from the crypto hodlers, the whales. So I think that had a short-term suppression to the market and giving them liquidity, which is healthy for the system.
Yeah. So I want to talk more about the broader message that ETF approvals really signals for the broader space and blockchain.
Well, I think there's so much. Look, New York Stock Exchange being the most prolific leader of ETF listings, probably 75% of all ETFs. So what are we seeing? New product innovation that is going to continue to foster that, again, democratizes access, is a bit more efficient from a tax standpoint. So I think that's awesome for the ETF space. But I think when we look at it, it's a signal that there's more acceptance going institutionally as well, that blockchain, crypto is not going away, and it's going to be part of our ecosystem. So I think this is the first major signal where we have some regulation and endorsement from the SEC of saying, yes, this is good to go.
Now let's talk about smart contracts. This is an area that you're focusing on. Let's explain to our viewers exactly what that is, why that's significant, and elaborate on their acceptance in the space.
Well, look, I think smart contract, and if we separate cryptocurrency and a Bitcoin, for example, from blockchain technology itself, two separate conversations. So I think when we look at a smart contract as being a programmable event that takes action immediately, the ability to create a structured product around that, whether that's debt, equity, revenue sharing. So I think it's a whole innovation, and I'd say the evolution, key difference to a revolution. So a lot of cryptography folks will have you think that this is a revolution of doing away with market infrastructure. I think it's an evolution that's going to make it better and more efficient across product creation, settlement, clearance, depository, regulatory real-time settlement, similar to continuing link settlement, but in a real-time process on a smart contract.
Now, the SEC rejected more than 20 spot Bitcoin ETF applications prior to all of this. I mean, what would you say the regulatory temperature is right now? What can we expect moving forward?
I think it's still an uphill battle. Anything associated with blockchain and crypto, in the regulatory sense, we're still in the, it looks like a security, how we test, right? We need some innovation, I think, and better clarity, but I think some of the regulation or enforcement by regulation from the SEC is slowing down a bit. I think this is a great signal of some warming, but I think there's a ways to go.
Okay, and what do you think the biggest trends are, like, that are going to happen this year?
I think, you're going to see, I'd say, some of the adults in the room stepping up institutionally. I think you're going to see more people embracing regulatory frameworks as a conduit around blockchain and digital instruments that are going to create much wider distribution and acceptance.
And let's talk about, obviously there's a lot of action that happens here at the New York Stock Exchange, but what do you think investors are mostly keeping an eye on these days?
Well, look, I think people are always looking for new ways to capture alpha. What is that product? What's an efficient way to trade? How do we access new markets? And I think looking at trends of things that are happening, for example, at Davos. What is the messaging that's coming out on ESG? Right? We have this yin and yang happening. How's that going to affect corporate governance? What's going to be the adoption? Is there consumer, stakeholder pushback, more acceptance? So I think that messaging coming out is going to have a big impact on adoption, our upcoming political cycle, and those outcomes that are going to affect markets.
Yeah. Well, thank you so much for joining me, Vince. It's always great to have you on.
Always my pleasure, Trinity. Thank you.
You too. All right, well, last week I headed to the West Coast from the corner of Wall and Broad Streets to one of the largest tech events in the world and my hometown of Las Vegas. CES features breakthrough technologies and global innovators with more than 300 Fortune 500 companies in attendance, and more than 150 countries, territories, and regions were represented. Keynote addresses were delivered by executives of many companies trading here at the New York Stock Exchange, including the CEOs of Walmart, Best Buy, and Snap. There's plenty of action taking place here at the New York Stock Exchange, and it'll all kick off when we ring the opening bell in about 10 minutes. But first, ICE is tackling all things from fixed income to fighting climate change. So let's take a look.
The Fixed Income Forum brings together some of the industry's greatest minds to discuss its challenges and opportunities.
It's an exciting time to be in bond markets because there has been a tremendous amount of volatility and an unusual Fed rate hiking cycle, both in terms of the pace and the magnitude of hikes, and what that has meant for yield curves.
There's a lot to look forward to for fixed income investors. Yields are at levels that allow investors to fundamentally change their portfolios in more efficient ways using ETFs.
We're finally at a convection point where we're beginning to see yields be so attractive relative to other asset classes.
So today we talked about active or passive, to be or not to be. And the beauty is that you don't have to pick one. We are observing more and more traditional asset managers launching active ETFs.
Execution strategy is becoming a bigger and bigger part of the portfolio management process. You want to be able to add value through how you execute and when you execute.
We spoke extensively about how ETFs have played a critical role in modernizing the bond market, as a result making it a lot more efficient. There's clearly an indication that there is quite a bit of demand for fixed income, and investors are patiently waiting on the sidelines.
When we talk about the electronification of fixed income markets, we often talk about the three-legged stool. That is the explosive growth of fixed income ETFs, the advent of portfolio trading for large transfers of risk, and the development of pricing algorithms that are providing liquidity to the market. And the combination of those three things is really what has propelled electronification and automation in fixed income markets, and what we think will continue to drive things going forward.
Climate events are rising in frequency and severity. Increasingly, climate risk impacts investment risk. To help integrate these risks, the ICE Climate Transition Analytics tool generates analytics to identify, assess, and report climate factors in portfolios and loan books. Upload a portfolio to generate an array of climate analytics. Access carbon footprinting analysis, avoided emissions data, and Scope 3 emissions data. Conduct net zero analysis. Compare portfolio and benchmark pathways. Check portfolio's progress towards stated decarbonization targets. Conduct scenario alignment. Analyze portfolio implied temperature rise score and assess trajectory against chosen climate scenarios. Calculate temperature scores using the Science-Based Targets Initiative aligned approach. Access stranded assets data and analyze fossil fuel reserves footprint and country-level exposure. Generate and customize powerful reports, including TCFD-aligned reports that can help you meet your regulatory and stakeholder requirements. Access ICE's Climate Transition Analytics and more today.
Welcome back to NYC TV Live. Now, while the cryptocurrency world has been dominating the headlines, there's plenty more happening here at the NYSE. Innovid, a tech platform streamlining advertising solutions for more than 1,000 companies, will be bringing the opening bell in just a few moments, from the cubes above the trading floor to the video screens on the NYSE building on the corner of Wall and Broad Streets in Lower Manhattan. We also have Innovid's branding all over this iconic building. Now, just a little history of this company. It was founded in 2007. It helps companies by powering connected TV advertising, streaming, personalization, and measurement. Then in 2015, Innovid was awarded a U.S. patent for inserting interactive objects into video content after initially filing for a patent back in 2009. Now, the company began trading on the NYSE in December 2021 under the ticker symbol CTV. The company has partnered with a slew of different businesses trading here at the NYSE, including Salesforce, Disney, and Oracle. And earlier this month, Innovid published an article highlighting 10 trends that will change TV advertising in 2024. One that I want to highlight is bringing AI into advertising. The company anticipates that it will start seeing AI evolve as a critical component within creative workflows, campaign insights, and activations at both brands and advertising agencies. Another headline is the transition in all digital TV future. According to Innovid, more than a half of TV advertising impressions were via connected TV. Now, the company believes that a percentage will leap higher this year and advertising dollars will follow. Now, according to market research company eMarketer, CTV advertising will surpass a whopping $40.9 billion by 2027. Now, today's deep dive into spot Bitcoin ETFs and Innovid ringing the opening bell is just the tip of the iceberg when it comes to NYC TV Live programming this week. Fly Exclusive, which joined the NYSE via a SPAC merger in December, will ring the opening bell tomorrow morning. Fly Exclusive, an owner and operator of private jet experiences, has more than 90 jets in its fleet. The company's CEO, Jim Surgrave, will join us after he rings the opening bell. Then that afternoon, the American Cotton Shippers Association will ring the closing bell. The ACSA, whose members firms handle over 80% of the U.S. cotton sold in domestic and foreign markets. It was formed nearly a century ago in July 1924. Bell ringer Buddy Allen will join our own Judy Shaw to discuss the significance of ringing the closing bell. And on Friday, dining and entertainment platform Pinstripes will ring the opening bell. The company blends Italian-American cuisine, bowling, and bocce ball, and currently has 14 locations across the United States. The company's CEO, Dale Schwartz, will join us to discuss the company's expansion plans after he rings the opening bell. One more to note about Friday's show: there will be a bocce ball court in our boardroom. And while it will surely be a sight to watch, it won't be the first time this sport has taken over the boardroom. Check out what took place when Major League Pickleball rang the opening bell at the Exchange back in 2022. We're getting pictures of that right now. And I mean, that day was just so incredible. As you're seeing right now, the players, we completely transformed that boardroom. The team here, this is just a little glimpse in what we can accomplish here at the New York Stock Exchange. And now before we go, investors are hoping to see a bounce back from the major averages during today's session. The Dow losing more than 200 points on Tuesday after the 10-year Treasury yield tops 4%. The 10-year yield climbing after Fed Governor Christopher Wallace signaled that the central bank may be easing monetary policy more slowly than Wall Street may have anticipated. But we are going to open up the U.S. equity markets now, so let's take a listen.
Brands speak for themselves. The strongest brands stand the test of time. We are so excited to welcome you to our community. Today is all about you.
We've never lost sight of what we're trying to do and deliver that mission.
Going through this experience with my partners and my families has been unbelievable.
We imagined something that didn't exist yet, and we believed that we could do it.
You're going to look back on this accomplishment as one of the finest you've ever done.
I want you to know that the best is yet to come.
Just a few minutes, we'll go downstairs to the legendary New York Stock Exchange trading floor to ring the opening bell. The history here, the tradition, it's just incredible for us to be at this moment.